Good morning or good afternoon, everyone, depending on where you're joining us from, and welcome to today's webinar. My name is Jenna May from Business Review, and I'll be your host. It is our pleasure to have MEED with us today, who will be presenting this webinar titled Energy Sector Outlook in the Middle East and North Africa. Today's guest speakers are Andrew Roscoe, MEED Energy Editor, and Richard Thompson, Editorial Director. I'd like to welcome you to our webinar platform, On24. You'll notice that this webinar is browser-based, so if you disconnect for any reason, please just click on the link that you received via email to rejoin the session. In order to ask any questions, you can send them in via the questions widget. Just type them into the box at the top left-hand corner of your screen and click Submit. We'll allocate some time towards the end of the session to address any questions or thoughts that you may have. Please use the yellow help widget if you require any assistance, and you can move, resize and maximize any of the windows to get a better view. But for now, please allow me to welcome Richard.
Thank you, Jenna, and good morning, everybody. Welcome to Trends in the Middle East Energy Sector 2018. This is the latest webinar from MEED. I'm joined by Andrew Roscoe, MEED's Energy Editor today. We have a short presentation of about 10 slides that we will go through, and then we will open up for a Q&A. So the energy sector is particularly important for the region. It is one of the obviously most vital sectors from a government and society point of view to ensure the continuous and secure supply of electricity and energy. And it is also one of the most active sectors in terms of reliable levels of capital spending on generation, transmission and distribution, and increasingly on digital technology and new technology to improve efficiency and to moderate consumption levels and to track consumption. So we are seeing about $30 billion a year invested in power and electricity generation and transmission and distribution across the Middle East and North Africa. That makes it one of the most consistent sectors and one of the largest sectors of all project spending in the region. And in addition to this, we're seeing new policies being introduced that are changing the nature of the market, whether it's to promote the energy efficiency through digital technology, or whether it's the diversification of energy supplies through the development of alternative energy such as nuclear power or renewable energy such as solar and wind. Demand, Andrew will go into this in a lot more detail further on in the presentation, but demand across the Middle East and North Africa for electricity is rising at about 6.2% a year. And investment in capacity is just below that level at the moment, and so the region needs to continue its spending to keep up with this rising demand. Currently, there are about $772 billion worth of power projects planned or underway across the Middle East and North Africa, so a huge pipeline of project opportunities. And as I mentioned, there are a number of policy issues that are shaping the way that money will be invested. So the diversification away from fossil fuels into alternative and renewable sources of energy, new ways of financing projects, and we're seeing particularly the rise of the return to PPP and IWPP and IPP privately financed power projects. And of course, the rise of renewables, which Abu Dhabi and Dubai in particular have been really making waves over the past couple of years, driving down the cost of generating renewable energy through solar. This then allies to the development of private electricity and, of course, new forms of electricity leads to new regulations, and so things like new laws covering feed-in tariffs, so surplus energy generated can be you can earn revenues paying into the national, providing into the national grid, feeding into the national grid, and PPP, public-private partnership legislation covering procurement, and of course the reforms of energy tariffs that remove government subsidies of energy. So all of this is going on in this sector at the moment. On the slide in front of you, you can see the front cover of our latest research report called Mena Power Sector Outlook 2018. This was published at the start of June. If you are interested, and it's a big document, about 300 pages, going into a lot of detail on the things that we'll be discussing today. If you're interested in this, in buying this research report, attendees of today's webinar are eligible for a $500 discount using a special discount code that will be emailed to you. So everyone who is listening now will receive an email after this webinar, which will explain the details of how you can, if you're interested, how you can purchase this report and how you can access this $500 discount. So I'm going to do a few comments just on the background drivers of the market, and then I'll hand over to Andrew, who will go into the details of the energy sector. So the drivers of long-term growth in the region, obviously, fundamentally, it's about population growth. We're seeing in the GCC population growth of about 5.8% a year projected until the year 2030. So the GCC population is expected to reach about 64.9 million people by 2030, up from about 53 million today. That's the fundamental driver of growth, and that is why we know that there will be continuing investment going into the power project sector, because to meet the needs of the rising population and an expanding middle class population which has greater expectations for reliable energy supply, the governments need to keep investing. Of course, the region has abundant low-cost energy reserves, so they can provide feedstock on a reliable, low-cost basis to energy sector developers. And governments in this region, despite all of the uncertainty of the lower oil prices of the past few years and the fiscal consolidation efforts, the governments in this region are financially strong. They have huge reserves of capital, about $610 billion worth of capital reserves, and very low levels of debt, which are rising and are projected to rise to about 30% of GDP by 2020, but currently are somewhere around 9% of GDP. We also are seeing the growth of the region, the GCC region, as a business hub and as a tourism hub between Asia, Europe and Africa, obviously setting the region up as a centre for investment in manufacturing and for business, and therefore creating greater demand for energy. And we have, in parallel to that, the national visions that have been rolled out over the past 2 or 3 years, such as Vision 2030 in Saudi Arabia, driving long-term investment and diversification agendas. These are aimed at developing new sectors, and in particular developing the digital and high-tech industries that are an important part of the power market. We do have an inadequate infrastructure, so whilst there has been heavy investment in power and electricity generation and transmission and distribution over many decades, there is still inadequate infrastructure across large parts of the GCC, and of course even more across the wider Middle East and North Africa region. And you can think of markets such as Iraq or Libya, or even in the Gulf, Oman, for example, need to develop greater networks there. So huge levels of investment required to bring infrastructure up to speed across the region. And we have these high-value opportunities that emerge quickly in this region, such as the NEOM project, the $500 billion megacity in Saudi, or Expo 2020 in Dubai. Key policies shaping the market. So those are the background drivers. I think over the coming years, the fiscal consolidation that we have seen shaping spending plans in the GCC over the past 2 or 3 years, I think that will continue to be the primary factor in policy making, economic policy making, the drive to minimize budget deficits and to limit debt levels at a sovereign level. And from an energy sector point of view, I think that means the focus on PPP, on IWPP, on IPP projects, that will remain the primary model for procurement for new power generation. We're seeing, of course, the diversification of national revenues through new taxes. VAT in Saudi Arabia and the UAE has already been introduced, and new fees, government fees for government services across a range of areas. The localization of jobs and the localization of the supply chain, particularly developing in-country value programs to build manufacturing capacity in the local markets. That's a very important policy to create jobs and to add value to the local economy. If you look at the fifth bullet point, energy efficiency and security, so the need to reduce energy consumption at a local level and also to protect the hydrocarbon assets. So I think the diversification of energy supply away from fossil fuels is very, very high up the agenda, but also the drive for greater asset optimization and greater monitoring and control of consumption through digital technology and big data. And then finally, the second from bottom on this slide, the move to PPP, private finance and other sources of finance such as export credit guarantees. These are going to be key factors in capital spending on electricity going forward. And then the final slide from me before I hand over to Andrew. This is a summary slide of the GCC projects market in total. So there are about $2.4 trillion worth of major projects planned, but not yet awarded in the GCC. So this is the pipeline of future projects, and you can see on the bar chart on the left, Saudi Arabia with about about $1.3 trillion worth of projects. That's by far the biggest projects market in the region. I think the slide is showing a slightly wrong number there. It should be 1.3 trillion. UAE is the second biggest market, followed by Kuwait. If you look on the right-hand side, we can see that construction accounts for the biggest slice of the projects market, and the two bars in orange, that's the power and the water sectors, which account for about $224 billion worth of unawarded announced projects in the power sector in the GCC, and about 56 billion of water projects. I've included water in this slide because of the link between the cogeneration link between water and electricity through desalination plants in the region. So that's the summary of where we are in background. There is a huge level of investment that is going to continue going into the power sector. It's going to be steered towards a greater diversity of sources, greater focus on energy efficiency and increased use of private finance. I'll be happy to answer any questions towards the end, but in the meantime I'm going to hand over to MEED's energy editor, Andrew Roscoe, who will take us through the rest of the presentations. Thank you.
Thank you for that introduction, Richard. So, as Richard has mentioned, the energy sector in the region is one of the sectors where projects are still going ahead. Heavy investment is still required. While some of the region's project sectors have stalled in recent years following the fall of the oil price, demand for power has continued to remain strong and grow at a rapid rate. This is due to increasing populations, and also particularly, when the oil price fell, governments are now seeking to diversify their economies. So they're seeking to diversify their oil sectors and increase the amount of higher value refined oil products, which requires more power, and also further diversifying their economies into manufacturing and other industries all require a lot of power. So demand for power has continued. According to MEED estimates, the installed generation capacity in the MENA countries needs to rise by 124 gigawatts by 2021 to meet demand and maintain reserve margins of 15%. So utilities must undertake an extensive capacity building program up to 2021 to meet this growing demand. So that will total 463 gigawatts of capacity by 2021 across the Middle East and North Africa. And that's about a 40% increase on the current nameplate capacity of 339 gigawatts. The GCC will account for a lot of that additional capacity required. 66 gigawatts of this additional capacity will be required in the GCC by 2025. There's currently 140 billion worth of power projects planned in the GCC alone. I think looking outside the GCC, there is heavy demand in Egypt for additional power. Egypt in 2013 and 14 suffered from numerous blackouts, even during winter periods, and not just the summer peak period. After a fast-track building program, Egypt managed to improve its situation, but it still requires quite a lot of additional capacity over the next 5 years. Iraq requires heavy investment. Iraq's main problem since the war and the US invasion in 2003, it struggled to keep up with power demand. A lot of its infrastructure was damaged. And just after it managed to award a number of contracts from 2008 to 2010, then they had the incursion of ISIS, which stalled a lot of these projects. A lot of them were cancelled, some of them were damaged. So now Iraq needs an extensive capacity building program. So the available capacity in Iraq is about 10.5 gigawatts currently, and the peak demand is about 23. So they've got a heavy shortfall there that needs to be addressed. Other countries outside the GCC which have a heavy requirement for power, Libya, which has also suffered during war. These markets will hope that the political situation improves so investment can be made. Okay. The next slide I have put up for you now is energy diversification slide. So I think the key trends moving forward, energy diversification is at the heart of the region's energy sector. There's a few reasons for this. The main one is to improve energy security, and that goes hand in hand with the concern over gas supply for power. So apart from Qatar, much of the region does not have enough gas for power. Even countries such as Iraq and Iran that have sizable gas reserves, they're not able to produce the gas to meet the domestic demand. So to boost energy security and reduce reliance on hydrocarbons for power, conventional hydrocarbons, governments are now looking to diversify their power sectors. They're looking at renewables, nuclear, and even coal to try and shore up energy security and diversify their energy baskets. So diversification is the first key trend. The second one is going to be about financing these projects. And we are seeing an increasing drive for private financing for power projects across the region. So private financing for power projects in the Middle East is not new. The first IPP was developed in Oman in 1994. And the model that became the blueprint for the region was in the UAE and Abu Dhabi in the late 90s and early 2000s. So the model has been established, but until recently, there was still a lot of countries in the region, Saudi Arabia being a pertinent example, that was continuing to push ahead with large government-financed EPC contracts for power projects. We're now seeing a wholesale shift towards private power projects. So Saudi Arabia has committed for all of its major future power projects to be developed under the IPP model. Similarly, Dubai, which until 2015 had just awarded government-backed EPC contracts, is now going ahead with IPP procurement models for most of its power projects. And the next phase of the sort of encouraging the private investment in the power sector is on to the privatization of utilities themselves. So in Saudi Arabia, again being the primary example, and it's the region's largest utilities market, so this is the one everyone's been watching, is planning to privatize its existing Saudi Electricity Company, the power generator, and also SWCC, the Saline Water Conversion Corporation, which is a desalination provider and the largest desalination provider in the world. So that will be the other key trend that we are seeing in the market. On the slide in front of you, you will see the energy diversification data that we've produced from MEED, and that shows just how utilities in the region are looking to diversify away from oil and gas. At the moment, the region's power sector is heavily, the power is produced mainly by gas and oil, and now we are seeing the shift to move away from that. So we have solar power, nuclear power, coal power, and even waste-to-energy projects that are being developed to encourage diversification of energy and reduce pressure on finite gas resources. So MEED estimates about $156 billion is going to be invested in fossil fueled plants over the next 5 years, so it will remain the primary producer of power. But we're seeing a number of other technologies coming to the forefront. We have $89 billion of renewable energy projects in various stages of the planning process, $26 billion worth of coal projects, which is interesting as many other regions in the world are moving away from coal. The Middle East has started to introduce it to the power sector. Dubai is currently building a 2,400 megawatt coal power plant. Oman is looking to develop a large coal power plant, and even the Northern Emirates in the UAE are also looking at it. Egypt has just approved the award of a $4.4 billion contract for a 6 gigawatt coal project, El Hamraouen, which will be one of the largest single-site power projects in the world. So that just shows that utilities in the region are looking at all possible alternatives to conventional gas and oil power plants. The next slide, which should be on your screen now, is planned nuclear power plants. As mentioned before, there's about $129 billion worth of nuclear projects planned across the region. I must stress that this capacity will be developed over a number of years. Saudi Arabia has the largest nuclear power program planned, with 17 to 19 gigawatts of nuclear power currently planned. However, they still haven't got the first project underway. They're looking to develop a 2.8 gigawatt nuclear facility for the first project. They've recently shortlisted companies, nuclear providers from around the world, from South Korea and Russia, amongst others, to compete in the tender. So they're hoping to start the tender process for this by the end of the year, but due to the complexities of nuclear power, this is probably going to be pushed into next year. But just the move towards nuclear from Riyadh and its commitment to nuclear power in its 2030 economic reform programme shows the real commitment there to developing the technology. The current project in Abu Dhabi, with federal UAE project located in Abu Dhabi, is the Baraka nuclear power plant. That was supposed to be operational in 2017, but as with many nuclear projects, it suffered from a few delays, so they're hoping to have that operational by 2020. And when fully developed, that will provide 5.6 gigawatts of power for the UAE grid. The other large project, nuclear project, currently underway or will be executed soon is in Egypt. So in 2015, Cairo signed an agreement with the Russian nuclear company Rosatom to develop a 4.8 gigawatt nuclear power facility at El Daba. The project recently reached financial close, and they're looking to start executing the project in the next 12 months. The next slide, which should appear now, is planned renewable energy projects. And this is an area that's creating great interest throughout the region and the wider world, is the development of renewable energy in the Middle East. There's currently about $89 billion worth of projects planned across the region. And the move towards renewables is being driven mainly by the fall-in cost of renewable energy. So it will reduce carbon emissions, but the fact is it comes down to plain economics. Producing solar energy in the Middle East is now cheaper than conventional energy. So we're seeing a number of countries moving ahead with large renewable projects, and also setting large and ambitious renewable energy targets. The largest project, the largest market in the GCC currently for renewables is the UAE, with both Dubai and Abu Dhabi pushing ahead with large renewable projects. Dubai has more than 300 megawatts of renewable capacity installed. Abu Dhabi already has 100 megawatts installed, and it's developing a 1.2 gigawatt PV solar project currently, which will be the largest single-site solar project in the world when completed. And my next slide, which should appear now, sets out some of these targets. So the UAE has set a target for 50% of its energy to come from clean resources by 2050. And in Dubai, the target's even more ambitious, at 75% of its energy supply to come from clean energy sources by 2050. And it'll set a target of 25% of this to come from renewables by 2030. It's been pushing ahead with PV projects so far, photovoltaic solar, which is where the electricity is generated directly from the sunlight. It's turned directly into electricity. But it's also going to push ahead with concentrated solar power, CSP, which is thermal storage, which will allow solar power to be produced and stored, and then electricity can be provided during the evening. So that project, a large $3.4 billion CSP solar project, has been awarded to Saudi Arabia's Aqua Power, and they're just waiting to conclude the financing before that project starts. The other large renewable project in the GCC is Saudi Arabia, and this is a market that the region has been, and globally, developers and power providers have been waiting for a long time. It launched its first renewable energy program in 2010 under the auspices of KAK, which I'm sure many of you will be familiar about, and it set very ambitious targets of 40 plus gigawatts of renewable energy over the next 20 years. However, this program struggled to get off the ground, and many people were left disappointed. However, it's been the Kingdom's renewable goals have been given fresh impetus for the 2030 economic vision, and being driven by the Crown Prince Mohammed bin Salman, and a target for 9.5 gigawatts of solar energy has been set by 2023, which is still more realistic than the previous target, but it's still very ambitious, and will create a lot of opportunities for the market. 3.5 gigawatts of clean energy projects will be developed by 2020. Okay, and the first project to be awarded is the 300 megawatt solar PV project at Sakaka. The contract was awarded earlier this year in February. The second project is a 400 megawatt wind capacity, for which bids were received earlier this year, and they still have to be evaluated. And also in Saudi Arabia, big news coming out in March this year was that Japan's SoftBank had signed an agreement with Saudi Arabia's Sovereign Wealth Fund, the PIF, to develop a $200 billion, 200 gigawatt solar development, which would be by far the largest single solar program in the world. And this is something that the market's got very excited about. While some people are sceptical on whether this will be completed, even if 10% of this moves ahead, 20 gigawatts, that will still create numerous opportunities for the market. So that concludes the slides. I will now pass you back to Richard. I believe you've got some questions for me.
Yes. Thank you, Andrew. Or Jenna, do you want to take the questions and field them from there?
Right, yeah, I'll explain to the audience how to submit some questions. So thank you so much for that, Andrew. Okay. So just a reminder to the audience, in order to ask questions, you can send them in via the questions widget. All you need to do is type them into the box at the top left-hand corner of your screen and click submit. And so we'll kick off straight away with the first question, and that is, Andrew, what are the most important upcoming projects?
What are the most... Okay, so I think the projects that the market is waiting for, I've touched on a few of them already. Saudi Arabia's renewable energy program is underway. Bids were received for the 400 megawatt winds project earlier this year. The commercial bids haven't been opened. They're supposed to be publicly opened. That hasn't happened yet. There's been a bit of a delay there. So the market's waiting to see what happens with that one. Following that, the body in charge of the Kingdom's Renewable Programme now, the REPDO, it announced it was going to tender 4.2 gigawatts of projects in 2018, which is very ambitious. So the market's waiting for that to kick off. In Dubai, they have recently tendered the consultancy contract for the 5th phase of its ambitious Mohammed bin Rashid solar park, and that will be a PV project of around 200 to 300 megawatts. So the market will be waiting for that one. In terms of more conventional large power projects, in Bahrain is the Al Duer 2 independent water and power project. Bids were recently received from 2 bidders for that, led by Saudi Arabia's Aqua Power and the other group by Japan's Sumitomo. So the market will be waiting to see what happens with this one. Outside that, Kuwait is a market that's got a lot of potential. They need to develop up to 10 gigawatts of additional capacity over the next 7 years. So they've got a number of projects the market's waiting for. 2 large IWPPs planned at Al Zour North, which I believe they're going to try and start the proceedings to appoint a consultant in the next month or two. The market's waiting for that. And I've already mentioned the Egypt coal project that's been awarded, the world's largest project, so that people will be waiting for that to reach financial close and move ahead. Outside of that, in Saudi Arabia, there's a number of large projects that were planned that have sort of been delayed for a while now. These include the Taiba ISCC, planned in the Medina area of the country, the PP15 project. These were projects that had been tendered previously as EPC or EPCF contracts, and then they were delayed, and the market's waiting for them to reappear as PP15. And also SWCC in Saudi is planning the Jubail 3, which will be a large combined power and water project. So they're hoping to start the tender process for that by the end of the year. So these are some of the big projects that the market is waiting for.
Thank you for that detailed answer. And the next question is, what is the outlook for the Saudi nuclear program?
The Saudi nuclear program, that is an interesting question. A lot of people have been asking me about that personally recently. So, as I mentioned during my presentation, the first project will be 2.8 gigawatts, 2-reactor plant. And they started the process for this last year. They invited interest from international nuclear providers. So they had interest from the South Koreans, from the Chinese, from the Russians, and also the US Westinghouse expressed interest. And that was made publicly available after a number of meetings with the Trump administration, with the Saudis. But still waiting to get the final list for the companies that will be invited to bid. Recently it was reported that the South Koreans and the Russians, the Rosatom, have been shortlisted. So we're waiting to see what is the final list for that. But once this has been finalised, we should see the first, or the moves to start the tender process for that before the end of the year.
Perfect. Just a reminder to the audience that you can still submit your questions via the Q&A widget. And the next question is, do you think the Saudi electricity privatization will happen?
Yes, I think it will happen. It's been quite a long process. So the process to privatise SEC began in about 2008. As did the process to privatise SWCC. And the SEC privatisation did make more progress, and they started the unbundling process, which is where they will separate the grid company from the generation companies, and they formed the National Grid Transmission Company in 2012. So that showed signs of progress. Since then, though, it's been a bit slower in unbundling the generation assets and selling them off to the market. However, this process was boosted last year when they created the principal buyer, which is an important part of creating a private power market. So the principal buyer has been set up, and now I think they're still working on unbundling the assets, working out which assets will be sold off. I believe they're looking to sell off the existing assets in chunks of about 20 gigawatts. And as far as I'm aware, there's a lot of interest from regional and international investors. The reason for the interest is with existing assets, the investor knows what's there, they know the output, and also there's a feeling that existing assets can be improved, particularly the older ones. So it's an opportunity to come in, invest, improve the efficiency of these plants, and make some money in the future.
Brilliant. And the next question is, what is the status of the Al-Zour IWPP in Kuwait?
Okay, so the Kuwait market, as I mentioned in my presentation, is one that's there's a lot of potential there. They need a lot of power. They've just struggled to get moving ahead with projects. So they awarded the contract for the first phase of Al-Zour North in 2013, and so after that one, it was hoped that that would be the sort of the blueprint, and that would spur on the next phases of the Al-Zour development and the other IWPP's plans. However, even after restructuring the PPP body and reforming the legislation for the PPPs, there was problems with the second IWPP, Al-Zour North 2, and that was cancelled last year, about a year after bids were received. So as far as I'm aware, they're looking now to merge Al-Zour North 2 and Al-Zour North 3, which is going to be the third phase together for quite a sizable plant. And they're seeking to appoint consultants soon. Because they're merging the phases 2 and 3 together, they're looking to appoint a new consultant and a new transaction advisor to assist CAP, Kuwait Authority for Partnership Projects, to move ahead with a tender for that. So that should be happening around about now. The tender for consultants should be coming out shortly. So I presume that the main developer contract will come out early next year, early 2019.
Right, and our next question is, what is your view on Iraq potential?
Iraq is a market where a lot of power is required. Required urgently. I think the key with the Iraq market will be whether they can get private investors in to assist build this capacity. Due to the conflict there and the ongoing problems they've had with ISIS recently, the government has been unable to proceed with important power projects. However, now that ISIS has been removed, there's a hope that the new stability will allow many of the previous projects to move ahead, and also new projects to move forward. The key is financing. So while I said that the trend across the region will be for privately financed IPP projects, in Iraq to gain interest from investors and attract investors there will be difficult due to the security concerns. They'll need to be able to offer a sovereign guarantee to developers, so if there's any problems there, the investors will receive their money back. So that will be an important first step. So I think before we get to that stage, there will be projects will be procured through an EPC plus financing, EPCF model. So we've seen that currently happening with GE, which signed a contract to develop a major power plant. And they're going to provide financing for that, partly from the US Export Credit Agency. In February this year, the UK announced that it was going to be assisting GE's efforts through UKEF, the UK Export Credit Financing, which will provide over £200 million towards it. So I think government support through export credits will be the way it will have to go in the short term to meet demand. But ideally what needs to happen is that a market can be created that investors will feel comfortable investing in.
Thank you. Our next question is, are there any confirmed IWPP projects in Qatar?
Yes. There's currently a project planned, Facility E, IWPP, which has been a bit slow. So earlier this year, I should say last year, companies were invited to pre-qualify for this. As far as I'm aware, they have finalised a pre-qualification list. They finished that, finalised that earlier this year. The tender has been delayed, however, for the project. I think they're assessing whether they need to develop the project right away and whether it needs power and whether they need additional power and water. So I think they're basically just assessing that just now and deciding whether they really need it in its current form or whether they'll move ahead with it as a standalone water project. So Facility E is the next project. However, I think we'll have to wait and see what decisions made by the clients on that, Karama, whether they really need to move ahead with it and in which form it will proceed.
Brilliant. The next question is, how will the decline in economy in the GCC affect these projects?
So I think when we talk about the effect of the economy, the fall in oil price has always had a significant impact on the way that governments are planning to move ahead with critical infrastructure schemes. So as I discussed earlier, there's a wholesale shift now towards IPP model where you get the private sector in to develop projects using, but they'll finance the projects and then the government will repay them over 20 or 25 years. And in terms of, there's a lot of talk of PPPs and private investors being required. The power sector is the one sector where the model has been tried and tested for a number of years. It's an easy model to use. I mean, there's a clear offtake agreement. A developer will build a power plant and the government will pay them for the electricity. So it's the easiest sector to utilise private financing. And that's why countries like Saudi Arabia are pushing ahead with it, because they need to push funds and their capital expenditure into other areas where it's not as easy to use a PPP model. So that we'll see that happen. In terms of will it impact demand for power, I think we'll need to wait and see in terms of the industrial demand. But what we've got to remain aware of, Richard touched on it earlier, population is still increasing at a significant rate across the region. And electricity demand in tandem with this of about 5% a year. So the population rate is dictating more power is required. There's also a lot of existing plants are old and they need replaced. So there's a lot of demand for power projects and they can't delay with power projects. It's not like real estate projects where they can sort of be shelved. Power is, it's vital. So I think we will see progress with those. And even in the oil sector, if oil price drops again, the governments are seeking to diversify into refining projects, sort of higher value to sort of boost revenues and the capital they can make from oil, even if the price drops. So I think the power sector will be more robust than others. And I think the key, though, is attracting private financing. And there seems to be interest for that at the moment.
Perfect. The next question is, what is the reason for the delay in phase 2 of the Al-Zor PPP project?
So the cancellation of the original tender, that's the official reason. It wasn't really didn't really give much. There wasn't much detail provided officially on that. I believe that there was a feeling the bids weren't competitive enough. And also, I think the official reason was that they wanted to revise the scope and push ahead with 2 and 3 together, which they're doing. Why is there a delay currently? I'm not sure. I think just due to the need to appoint a consultant and start again. So as far as I'm aware, though, there's a commitment to doing that. I think one positive element for people following the Kuwait market is that earlier this year, the government approved the award of the waste-to-energy project and the Al Hayman wastewater project. So these are both PPP projects where bids had gone in over the past couple of years. Preferred bidders had been selected, and the approval of these by government now shows that there's going to be more progress with the rest of the programme. So hopefully we'll see some developments with this soon.
Thank you. And the next question is, what role do you see for UAE engineering manufacturing companies in the power and water sector growth you have outlined?
So I think for UAE companies, there'll be opportunities within the UAE. In Dubai itself, it's pushing ahead with a number of projects, solar projects, but also conventional power projects at Awir. But in Abu Dhabi, they will have a lot of capacity coming on soon from the nuclear project. But as far as I understand, they're looking at pushing ahead with another major solar project in the near future, which will offer opportunities. Also in the Northern Emirates, there's opportunities. So FIWA, the Federal Electricity and Water Authority, which provides power for the Northern Emirates, they are planning a number of projects. One of these is a large coal facility. And also SIWA, the Sharjah Electricity and Water Authority, is planning a major project as well. So the Northern Emirates has been receiving a lot of power from Abu Dhabi over the past 5 years, an increasing amount of power. However, now it's seeking to develop its own power there. So I think that there will be opportunities for UAE companies. And also if the companies want to move a bit further afield within the GCC, there'll be opportunities. I mean, I've mentioned Saudi Arabia will be the largest market. Also Kuwait, which we're hoping there'll be movement there. So I think, there will be opportunities for UAE companies. So we just need to hope that projects proceed as quickly as they're planned.
Excellent. Just another reminder to the audience, you can still submit your questions via the Q&A widget at the top left-hand corner of your screen. And our next question is, we've been hearing about privatisation of SEC and SWCC for quite a while. Do you know when the legislation will be put in place for this privatisation?
So I think in terms of, I did touch on this earlier. They're quite complicated processes. So what they need to first do is identify the assets, unbundle the assets to be put out to the market, but also have the infrastructure in place already, have the rest of the organisation in place. So SEC, the principal buyer, has been formed, and now they're working on unbundling the assets, which will take some time. In terms of the legislation for that, I'm not sure if there needs to be specific legislation or just sort of the enabling environment created for it. So I think in terms of SEC, I've touched on the principal buyer. They've also transferred the existing shares, government shares in SEC, to the PIF, the Public Investment Fund, which is becoming an increasingly important player in the Kingdom's utility sector. So that should enable those shares to be distributed more efficiently and more quickly. With regards to SWCC privatisation, in the 2020 National Transformation Plan, which is sort of the blueprint for delivering the first phase of the 2030 vision, it has identified the Rattlecare power and water plant for privatisation. And this plant has been included in the recent roadmap, the NTP roadmap, which was launched in April. So they've set a target for privatising this plant by 2020. This is estimated to bring $7.2 billion when sold on the market. So now they're working on how they're going to do this and when they'll move ahead with it. So I think in terms of that will be the blueprint for the water sector. When this plant has been privatised, the other ones will follow a similar model.
Excellent. The next question is, when do you expect a reform of KSA on diesel subsidies?
So I think we're already seeing a number of reforms in Saudi Arabia. Some of them are taking longer than envisaged. And some of the reforms they've moved ahead with, they've actually slowed down because they maybe moved ahead with them too quickly. A case in point being last year when wage bonuses were going to be removed for a number of government employees. And there was a sort of a bit of a public outcry, and then that was cancelled, decision to do that. And also, a major part of Saudi's economic reform program is removing subsidies. So diesel subsidies, and also reforming the tariff process, so the subsidies for electricity and water. They've set a target in the 2020 National Transformation Plan to remove all water subsidies by 2020 and reduce electricity subsidies, which should save the government $53 billion a year. And that shows the amount of subsidies that are currently being provided in these sectors. So the diesel target, I'm not sure an exact date for that. I know that the power and water subsidies target is 2020. It might be moved though, depending on they need to gather public support for these. Obviously, it's a sensitive issue, increasing prices. Earlier this year, the government announced the Citizens Fund, which will provide assistance to lower to middle income Saudis. And this was to help with rising electricity prices, rising fuel prices, and also the introduction of VAT. So I think that was welcomed by the IMF in April in its latest consultation. And that's an important step, that when you're moving ahead with major reforms, you need to ensure that it's being done in a gradual way. And I think introducing the Citizens Fund is an important step. And they need to make sure moving ahead, the Saudis, that they're aware that when they're undertaking these reforms, they need to ensure that the correct system is in place and the support for lower income people.
Great. Our next question is, in Iraq, is there the possibility of rebuilding the power stations destroyed in the ISIS war? If so, is this being funded by international finance institutions?
Okay, so there was, as I touched on earlier, there was a number of projects affected with the incursion of ISIS. And this is what they're currently, as far as I'm aware, they're currently working on now, is deciding how to proceed with the projects that were stopped or plants that were damaged during that. So I think, as I mentioned earlier, the ideal or the goal is to be able to move ahead with IPPs in the future, where private investors will come and build power plants. However, the state of the market at the moment and still the political uncertainty means that there won't be much interest for that. So I think the model that they will move ahead with is the one I mentioned earlier, the GE model, where the UK is assisting, and that's where government and export credit agencies will back loans. So I think we might see support from government agencies, maybe multilateral agencies as well. Their support will be crucial in getting these projects off the ground. And I think the goal is to be able to facilitate IPP projects in the future and attract private investors.
Brilliant. Our next question is, if you look at the current contract awards in 2018, almost all are renewable energy. What fossil power projects are expected to be awarded in the near future?
Okay, so yeah, I think that the fact that the major projects awarded or tendered this year have been in renewables shows the shift in the market. As I touched on earlier, this is due to the cost of renewables becoming much cheaper. However, it is important to realise that in terms of renewable energy, still very much a peak power supply. The storage for renewables, we do have thermal storage coming in some CSP projects, but in terms of battery storage for PV solar, that's going to be a few years off yet. So the base load and the main power will come from conventional thermal power plants. So there's some major projects happening. I touched on the one in Egypt, FIWA in the Northern Emirates planning a coal IPP. Also touched on the Al Dur 2 IPP in Bahrain. Qatar is looking at the Facility E, IWPP, Saudi Arabia the Jubail 3 project. So there's a number of conventional projects moving ahead. We will see an increasing number of renewables, but at the moment the renewable projects, the capacity is still quite a bit lower than conventional plants. So there'll still be a lot of tenders or a lot of projects required to help meet the demand.
Brilliant. The next question is, you've mentioned earlier about ICV and its impact on projects, but how does this translate to technology providers in the region? Every country has its own requirements, which are, to say the least, complex and unclear. How do companies try and navigate this?
Okay, yeah. So ICV, in-country value, has become already an increasingly significant part of developing projects in the region. Yes, as mentioned, it is quite confusing at the moment. Every country has its own requirements. However, I do think they're becoming more transparent in announcing these programs. So I think in Saudi Arabia, for example, the market I cover closely, the energy market, for the renewables program, they have set out quite clearly what is required in the tenders for renewable projects. They have stipulated in terms of the local content percentages they require. I think this is the way forward. I think clients need to be clear about this from the start. How do companies try and navigate this? I think they just need to ensure that the due diligence is done. I know that there's a lot of law firms throughout the region are working on trying to help companies with this, and also assist on the client side, help clients introduce the ICV in a way which is beneficial to both parties. So I think it's complicated, but I think the process is starting to become a bit more transparent, and I think we'll just have to wait and let the first few projects start, and then we'll get a better idea of ICV, of what's required. And I'm sure then the teething problems and the difficulties, there'll be work done to ensure that improves for the future.
Brilliant. So that is actually all we have time for today. Thank you for getting through all those questions, Andrew. That leaves me to thank you, Andrew and Richard, for what was a great presentation. And thank you as well to MEED for sponsoring the session. To all the attendees, you'll receive an email shortly telling you how you can access the on-demand version of this webinar. Or you can access it through our site, which is www.business-review-webinars.com. We also look forward to sharing further webinars with you, so please do keep an eye out on the website just mentioned, and feel free to follow us on Twitter at BRWebinars for daily updates, or join our LinkedIn group, Business Review Webinars. Once again, thank you all very much, and I hope you have a lovely day.